October 1929. The music stopped. In a matter of days, the most powerful economy on Earth would be brought to its knees. Not by war, not by famine, but by greed, euphoria, and the catastrophic collapse of trust. This is the story of the 1929 stock market crash, the event that shook the world and gave birth to the Great Depression. To understand the crash, you first have to understand the decade that built it. The Roaring Twenties, America's golden age of excess. After World War I, America entered an era of explosive economic growth. Factories hummed, radio sets filled living rooms, automobiles rolled off assembly lines by the millions. Between 1920 and 1929, U.S. industrial production nearly doubled. Wages rose, confidence soared, and for the first time in history, ordinary working Americans began buying stocks. The stock market became a national obsession. Barbers, taxi drivers, and housewives all poured their savings into shares. Brokers offered loans called margin accounts, allowing buyers to purchase $10 of stock for just $1 down. It felt like free money. The Dow Jones Industrial Average climbed from 63 points in 1921 to a dizzying 381 points by September 1929, a gain of over 500% in just 8 years. Nobody believed it could end. But beneath the glittering surface, the foundation was already cracking. By 1928, stock prices had soared far beyond the actual value of the companies they represented. Speculation, not earnings, was driving the market. Investors were buying shares simply to sell them to the next buyer at a higher price. A classic bubble. The Federal Reserve, alarmed by runaway speculation, raised interest rates in 1928 and again in 1929, trying to cool the market. But the warning went unheeded. In September 1929, the market began to wobble. Small sell-offs triggered nervous reactions. Cracks appeared in real estate. Banks had loaned recklessly. Consumers were drowning in installment debt. Economist Roger Babson publicly warned that a crash was coming and was ridiculed for it. Still, behind closed doors, a few sharp investors quietly began selling their positions. Then came the days that changed everything. On Thursday, October 24th, 1929, Black Thursday, panic erupted on the floor of the New York Stock Exchange. Nearly 13 million shares were traded in a single day, a record at the time. Prices collapsed. Crowds gathered outside the exchange on Wall Street, stunned. Bankers rushed to intervene, pooling over $130 million to buy shares and stabilize the market. The effort worked, briefly. Then came Tuesday, October 29th, Black Tuesday, the worst single day in Wall Street history. Over 16 million shares were dumped in a frenzy of selling. The Dow Jones fell 12% in a single session. Margin calls wiped out thousands of investors overnight. Fortunes built over decades evaporated in hours. The ticker tape ran hours behind, leaving brokers blind to how bad it truly was. By the end of that week, American markets had lost over $30 billion, more than the entire cost of World War I. The crash was just the beginning. What followed was the longest and deepest economic collapse in modern history, the Great Depression. Between 1929 and 1932, the U.S. stock market lost nearly 90% of its value. Over 9,000 banks failed. Unemployment surged to 25% by 1933. 1 in 4 Americans had no job. Industrial output fell by half. Millions lost their homes, their savings, their futures. President Herbert Hoover's response was slow and insufficient. It would take the election of Franklin D. Roosevelt in 1932 and his sweeping New Deal programs to begin pulling the nation back from the edge. Regulations were tightened. The Securities and Exchange Commission was established in 1934 to bring oversight to financial markets for the first time. America and the world would never look at money, markets, or government the same way again. The 1929 crash remains the defining financial catastrophe of the 20th century. A reminder that markets are not just numbers. They are built on belief. And when belief shatters, everything built on top of it comes down with it. The question history always asks, will we remember the lesson or repeat it?